Welcome back. My name is Charlene Randall, and I am the tax force with RandallParalegal.com. So, this is another video within our Masterclass series, and we're going to talk about today the partial exchange of a 1031 exchange. So, all or nothing. So, a lot of real estate agents and investors have a misconception that a 1031 exchange has to be all or nothing. They think that if they can't reinvest every single penny, the whole deal is dead. And that's simply not true. So, today we're going to talk about the partial 1031 exchange. And this is for the investor who needs $100,000 in liquid cash for another business venture, a luxury purchase, or even to pay down other debt while still deferring the rest of their $1 million gain. So it's about balance and it's about boot. Okay. So the IRS, in the IRS world, I should say, boot is any value you receive in exchange that isn't like kind property. So, with a 1031 exchange, you are exchanging the relinquished property for the replacement property, and it has to be a like kind property. So, if the equity is not going to the like kind property, then that amount is a boot. So there are two main types of boots within a 1031 exchange. So there is the cash boot, and so that's money that you take and you put it in your pocket. And then there is the mortgage boot, which is debt relief. So let's just say if you sell a property with a $500,000 mortgage and you buy one with a $400,000 mortgage, that is $100,000 difference. So $100,000 is the mortgage boot. The IRS treats it as if you receive that money all in cash. Okay. So, as your strategist, my job is to calculate your recognized gain. The rule is simple. Okay. You are taxed on the lesser of your total realized gain or the amount of boot you receive. So if you have a $500,000 gain, but only take $50,000 in cash, you only pay taxes on that $50,000. So the other $450,000 stays in your safe harbor vault, growing tax free. So this is what we call a partial exchange. So let's get into the boss level math. You can offset boot if you have mortgage boot, debt relief. You can offset it by adding it to your own cash into the new deal. However, and this is a big however, the IRS does not allow it to work the other way. You cannot offset cash boot by taking on a bigger mortgage. Okay? So we also have to watch the settlement standard. In 2026, the IRS is hyper focused on non allowable expenses. So if you use exchange funds to pay for things like rent prorations, tenant security deposits, or even certain loan fees at closing, you accidentally trigger boot. At Randall Paralegal, we do a line by line audit of your HUD 1 before you sign. So there are no accidental taxes at the finish line. Why would you choose a partial exchange? Maybe you want to diversify your business credit. You take $100,000 of your real estate equity, pay the high, pay the capital gains tax on that slice, and use it as a down payment for a business that generates high cash flow. You're using the lazy equity to fund an active empire. We also use this for portfolio right sizing. It's the perfect replacement. Property is worth slightly less than what you sold. We don't force a bad investment just to save a few bucks at tax. We structure the partial exchange, pay the boot tax, and keep the momentum moving. A tax boss knows when to pay little to gain a lot. So that's what we do at Randall Paralegal Services. And so we let our clients know all of these opportunities that they actually have when we do a partial exchange. So basically, these are the things that some of the misconceptions that investors and real estate agents have to know. So we spent this series talking about the 2026 playbook, the audit ready vault, and now the partial exchange. So this is the difference being a property owner, between being a property owner and being a wealth architect. So you don't have to fear the IRS when you have the right systems in place and strategies. So I want to personally invite you to join our private Facebook group, Connecticut Business Besties and Boardrooms, to continue this conversation. And if you're ready to have me personally oversee your next exchange, click the link to book your 1031 exchange consultation. So let's make 2026 your most profitable year yet. Once again, I'm Charlene Randall, your tax boss with randallparalegal.com. Your equity is your legacy. So let's protect it. And I will see you in the next video.